It's time to begin our viewer queries, and for that we have Anant Ladha, founder Invest Aaj For Kal. Anant, good evening and welcome to the show. And this is the last segment of the show, and we have a caller online. Jay Rao is on the call asking the question. Hi, good evening.
Hi.
Yeah, you can ask your question, Mr. Rao.
Actually, yeah, I would like to know what is the view on the Kotak Global Innovation Fund.
Okay. You have already invested in it,
So,
sir?
yes,
When did you
I
do that?
invested last 1 year,
Okay. And your time horizon to wait is for 3 to
three
5
to
years,
four
or you
years.
can go beyond that?
Yeah. Yeah.
All right. Is it lined up to any specific financial goal of yours? Is this
No,
tied?
nothing, just like that. No,
Just
nothing.
okay. All right. So Anand, before we advise Mr. Rao as to what should be his call on this particular fund, what is this fund all about? We're talking about a fund of fund, I guess, Kotak Global Innovation. So please start by explaining us what the fund is all about.
So this fund is majorly investing in Wellington Global Innovation Fund, which is a global large cap equity fund. Basically, when we see from 2011 to 2020, that decade was completely ruled by international market, especially US market, and they outperformed almost every asset class. So looking at that performance, many fund houses launched fund which were investing in international funds, and many investors were also running after international funds. There is no harm in it. If we talk about stock portfolio, it has majorly large cap stocks like Amazon, Visa, United Health. So if it is one of the funds which we have in our portfolio, for example, if our portfolio is of 100 rupees and we have 5 rupees invested in this fund, knowing that it is comparatively high risk fund, then it is absolutely okay. We need to wait for a time horizon of at least 4 to 5 years. But if this fund is having maybe 20 to 30% allocation of our total portfolio, then it is a problem of worry, because the kind of fund which we have, it is comparatively an aggressive fund, and we need to have very controlled exposure in such type of funds.
So do we have Mr. Rao online? Can we just talk to him? Mr. Rao, can you hear me?
No, no. Shall I add more units to this fund to make cost of acquisition less?
Sorry, I did not get your question. So is your allocation more than 20 to 30% in this fund? Your portfolio allocation?
No, no, it's around the 1-2% only.
It's 1 or
Then,
2%. Anant? Yeah.
Yeah.
then I think Mr. Rao is a very seasoned investor, and just to take some international exposure, he is choosing this fund. So I think he is well placed and need to wait for some time. It's a well diversified global large cap equity fund, and a good fund to have if we have a very controlled exposure.
All right, that's all. Thank you so much for sending us your query, Mr. Rao. We will move on. Our next query is from Amay. He is 51 years old and working at a MNC as a manager. Annual income is around 13 lakh, and he's invested in a few mutual funds through SIPs, and the funds are Axis Focus 25, IDFC Mid Cap Regular Growth, ICICI Blue Chip Fund, Mirror Asset, NYC FANG ETF. What exactly is the question is, I think he wants to know about his fund mix, and should he be diversifying more?
See, firstly, fund mix is good,
Okay.
but the percentage of investment as compared to his annual income is very low. So probably he need to increase his SIP if it is possible for him. There is only one change in fund which I would suggest, that is changing Mirai Asset and NYSE FANG ETF. This is majorly investing. FANG stand for FB, Amazon, Netflix, and Google. So this has majorly top 10 tech stocks giant of the world. If we are investing in global equity, I personally prefer a more diversified fund, something like S&P 500. So that will give us more diversified exposure in international equity. So this is one small suggestion which we can add on. Otherwise, looking at his fund selection, I think he's a defensive to moderate investor. And according to that, as that risk profiling, his portfolio is beautifully placed.
All right, we move on to our next question. Shankar Ganesh is planning to sell his second home in Chennai suburb and doesn't have much rental value. He wants to know whether should he be investing the capital gain proceeds in another property in Bangalore or invest in mutual funds in staggered manner. Very interesting question. It would be nice if I had Amey, if I had Shankar Ganesh on the phone line. But the kind of details that we have right now, Anant, what should be his strategy?
See, I would just say that India just won India-Bangladesh match. That is because India has a very stable team this time. We have good bowlers, good batsmen, good fielders as well, and good openers as well. So what I'm trying to say is, in order to win match of investing, we need to have a diversified portfolio. Looking at his question, I think if he already has good amount of exposure in equities and mutual fund, investing in property right now is not a bad decision because that will give him proper diversification of his portfolio. I know in last decade, last 10 years, property have underperformed. But whenever any asset class perform for more than 10 years, that asset class actually goes into the value zone. So right now, if we are investing, rather if we are smartly investing in property, then I think that's a better choice to do because he's redeeming his portfolio from property and investing back to property will even give him some uh, income tax benefit in section 54. So that can be a very good option. But suppose if you want to have some liquid assets, then probably he can reduce some amount of property investment and have some equity mutual fund. Both option is absolutely fine and good option to go by. But we have to first see our portfolio mix, whether we have proper diversification or not. So that will be answer for this question.
All right, and with that, it's a wrap. Thank you so much, Anant, for removing time and helping our viewers with their financial portfolio.